Hi, my name is Anuj Gupta, a strategic wealth consultant from Tag Investments. In case you haven't hit the subscribe button yet, please do hit the subscribe button and also the bell icon to keep receiving notifications. Today, the topic of discussion is SIP, Systematic Investment Planning. So many of us would be already investing in something called as SIPs. Somebody would have heard this term about SIP. Somebody would have heard there is something called as mutual funds SIP. Somebody would have heard systematic investment plan. But do we really know what is SIP and what are the benefits of SIP and how does SIP work? So we will try and capture all these aspects, characteristics of SIP in this video today. So SIP stands for Systematic Investment Plan. Well, many of the investors, when they are investing in SIP, they just think that okay, fine, I have some surplus corpus and I can save it on a monthly basis, and I should start SIP. So something like a jugaad. So is it a jugaad or is it an investment? So let us look at it. Well, this presentation is for information purposes only, and the thoughts, the views are purely personal. Have you ever thought about your future? Have you ever thought of your investment goals? Something like preserving money for the next 1 to 3 years. Your objective can be immediate cash needs, going for a holiday, buying a car, getting a child admitted in a nursery school. Second, are you looking to invest for creating a stability, some anticipated cash needs, making probably taking a break from job, and that is why you need some cash needs. Are you looking for growth? That is, you have 10 plus years, and the main objective of investing is capital appreciation. Maybe buying a house after 10 years, maybe uh, growing your corpus to fund your children's education. Your need can also be to create a regular income for your retirement age. So a monthly income source after say 10 years, 15 years. So that can also be one of your goals. So we are giving an example of a teacher who's 50 years aged, and she starts saving for a retirement which is due after 10 years, and she requires a monthly income after retirement. So she starts a SIP, and she deposits 25,000 rupees per month in SIP. And for 10 years, she creates a corpus of almost 65 lakhs, assuming a CAGR return of 15% in the SIPs. And then she starts a SWP at the rate of 50,000 rupees per month. And that is called systematic withdrawal plan. And she keeps receiving these regular monthly income. So this is the cycle where you start putting in money to create a sizable corpus for yourself via the SIP route, and then you start withdrawing almost double the amount of what you've deposited in 10 years, and keep getting a regular monthly income source. So did you know that probably there is something called as future value of money? So if your daily expenses sum up to 3 lakh 30,000 rupees per month, and your education expenses are say for your children, for self, is for 10 11 lakh rupees per annum, today's value, what would be the future cost after 15 years? So the daily expenses, which is today 30,000 rupees per month, would shoot up to almost 80,000 to 1 lakh rupees per month, and the education expenses, which is 10 11 lakhs per annum, would shoot up to 20 25 lakh rupees per annum. And what is the solution to it? The answer is systematic investment plan. Yes, you should start a systematic way of investing. First plan out as to what you require, and then start a systematic investment plan. Now what is SIP? We've already heard the full form, which is systematic investment plan, but we call it as save, invest, and prosper. It allows investor to save. It allows investor to invest fixed amounts regularly, and it allows investor to invest in the stock market via the mutual funds route. Now the importance of investment: it helps you to manage your investment goals. It helps you to support your family financial needs. it gives you a source of return, or it helps you make money by giving you some returns. It helps you save. Many of us have a good source of income, but we really don't like to save money, and we don't know where to save. So that is where this importance of investment comes into picture. Now, then it also helps to create a emergency kitty in case of uncertain events. It is liquidable, so we can also save for uncertain events, and obviously helps us grow money. Now, this is a fantastic slide. If you have a look, so life is a roller coaster ride, full of ups and downs. We all know we have to save money for various responsibilities in our life, but no matter how much we save, it's never enough. So, right from the birth to education to our career, getting married, starting a family life, and then retirement, we all need money during these stages of our life, and that is why the importance of investment comes into picture. Now, how does SIP work? So you are an investor, you pool your money with a fund house, typically mutual fund houses. There are asset management companies, almost 44 asset management companies in India. The fund manager invests in securities based on your financial goals. So there are categories of funds where you can invest in. So basis on the uh, fund which you have chosen, basis on your risk profile, basis on investment horizon, the mutual fund managers, they invest in those securities which are the objective is to meet that common financial goal. It generates returns and it passes it back to the investor. So that is how SIP works. Now, we also talk about why SIP. So it helps us do disciplined saving because we are investing on a month-to-month basis. It helps us do disciplined saving. It helps us create long-term gains. It is very, very convenient. It is an auto deduction from a bank. So we don't have to manually go and in case if we are lazy or in case if we have forgotten, we need to save for our various goals. So it's an automatic process where money gets deducted from a set amount of money gets deducted on a specific date every month, and it is flexible. In case if you want to increase, decrease your SIP amount, that is also possible. Now, the benefits of SIP, the power of compounding. We've made a video on the power of compounding, and we've also explained as to somebody who understands power of compounding earns money and creates wealth, and somebody who does not understand the power of compounding does not even know what he or she has lost. So, in case if you haven't watched that video, go please subscribe the channel in case you haven't, and search for this video, and you'll be surprised as to what is the power of compounding maths have to say to you, and how it impacts in terms of wealth creation and wealth destruction. In case if it is negative power of compounding and if it is positive power of compounding. So power of time, uh, affordability. You can start with as low as 500 rupees in SIP. It reduces risk because you're buying on a month-to-month basis. Sometimes the markets NAV values are high, sometimes the markets are low. So it averages out and it reduces the risk overall. So we just covered that the averages it averages out the cost. It inculcates the habit of saving. So just giving you an example, we have investors who start as low as 1,000 rupees, 2,000 rupees, 5,000 rupees, and by the year 3, by the year of 5 years down the line, those are the investors who 10x their amount. Somebody who started 1,000 rupees, they start investing or start saving 10,000 rupees because they get in a habit of savings. So it also inculcates the savings habit in you. Tax rebate. So there are ELSS, equity linked savings schemes within the mutual fund SIP route where you can save taxes as well under Section 80C. Now, where does SIP work best? If you start early, if you do regular investment, you stick around for long term, and you invest in the right asset class. These are the ways or the best practices how SIP and where SIP works best. Also understand the importance of time value of money. So it's a separate subject altogether, but we are not trying to capture everything in one video. So we'll be making further videos in terms of also explaining what is time value of money. In case if you are interested to know more about it, you can subscribe our channel, and we'll be making future we'll be making videos in the future. So money today is greater than tomorrow's money. Now, how does this statement stand to be true? So as an example, supposedly if if you were given 100 rupees today and 100 rupees tomorrow, or after 1 year, which one would you choose? The answer is 100 rupees today. Why? Because you can invest that money and create 112 rupees after 1 year, or 106, 108 rupees after 1 year. So that is where we say the time value of money. You should understand the importance of time value of money. So the conclusion is that 100 rupees today is worth 112 in the future. So it is better to save early, it is better to invest early. So that is what the time value of money is. So you should not lose on time. Many of the investors, when we talk to, they say that we'll be saving after 1 year, we'll be saving after 2 years. So they're losing out on the value of money, time value of money. Now, why to invest in SIP? Human life is long and has to pass many stages. As we showed our hand and we showed from birth to retirement, there are many stages, and it has its own challenges and opportunities attached to it. So that is why we need to save. Between 18 to 30, we are young. The main education and the main expenses are education, and we need to save more during those years. The middle age, between 30 to 59, we have responsibilities like marriage, children's education, children's marriage. So we have more expenses and less of savings capacity. When we are 60 plus, we are almost left with less of income, and we need to save more. So and our expenses increase. So in this graph, what we are trying to show is the blue shows the income level between the 18 to 30 versus the expense level. So obviously, because our expenses are less, we can save more. But in the middle age, between 30 to 60, 59, our income is whatever we earn, we almost spend 50% of it, and our income capacity goes down. When we are 60 and above, our income capacity goes less and our expenses go up. Now, why? Now again, the SIP journey. With SIP, your money grows with time. So you need to give time to every asset class which you invest in. Similarly, with SIP, initial years, 1, 2, 3, 5 years, you will not feel that your money is growing as much as you wanted it to grow. But 10th year, 20th year, as you reach, you understand that probably you would have underestimated the amount of money which you were expecting, and it outgrows your expectations. So in the initial years, that is for 1, 2, 3, 4, 5 years, you feel that you've not been remunerated, or you've not been rewarded as much risk you've taken towards investing in the stock market via the SIP route, or in the mutual fund market via the SIP route. But once you've crossed that golden period of 10 years, 15 years, 20 years, you actually make real wealth and create wealth for generations to come. Is SIP a good investment option? Yes, but mistakes and misconceptions are made by investors. So common mistakes like SIP is risk free. When people feel that once we have invested in SIP and we do rupee cost averaging and we'll be making money year on year, SIP is the safest. SIP can fetch you short term returns. So these are the common mistakes what SIP investors make when thinking of SIP or when starting SIP investments. Investor needs to know about some facts which are SIP can result into losses too. SIP investors miss the bus. Downturns are beneficial. So these are some of the facts which SIP investors should know, that SIP investments can result into losses. You can miss the rally, you can miss the highs, and then start when the markets are low, and you see consistently for 6 months, 12 months that you're contributing and you're not generating returns. But the good part is that the downturns, you're buying more and more and more units. So at the end, whenever the markets go up, you end up making good money. What stop investors to invest in SIP? They feel that it's risky to invest in equities. They feel that the markets are it's volatile. Market volatility is there, so there's risk involved. There's market timing. That am I entering at the all-time high? Am I entering at an all-time low? Will the markets rise from here? Will the markets rise or fall from the time when you are entering? So people try and do market timing. Now, example of rupee cost averaging. We take an example of somebody who's investing 5,000 rupees per month and investing in a fund whose NAV is 20 rupees. So the number of units accumulated for that particular month is 250 rupees. Now, similarly, somebody is investing 5,000 rupees for the next month, because SIP generally means that you are investing 5,000 rupees on that's a fixed amount every month. So the next month the markets fell and the NAV dropped down to 10 rupees. But the good part is you received more units, 500 units in the same price. Then the next month the market rose again to 13, to NAV of 13, and you accumulated almost 385 units, and so on and so forth. So by the time of 5 months, you've spent 25,000 rupees, but you accumulated almost 1585 units, which otherwise, if it was just 20, if you would have bought in a lump sum, say at the rate of 20, you would have only accumulated 1250 units. Whereas because through the SIP routes, you actually segregated or diversified your money into 5 months period, and you captured the market volatility well, and you accumulated more units. And ultimately, when you redeem, the amount which you get is the current NAV, which is say 25 rupees, into the number of outstanding units, which is 1585. So you actually make a lot of money through SIP in the gradual course of time. But please do not treat SIP as a short-term instrument to make money. This was just for understanding purpose. Now, fruits of long-term waiting. Now, we also said that one should not invest for short-term. So, we've just given a typical scenario as to somebody who invests for 2 years, say 1,000 rupees per month, which is 12,000 rupees per annum, 24,000 rupees in a year. At the end of 2 years, given that SIP returns are 2.88%, one would have just generated 24,721 rupees. But somebody who's investing, say, for 3 years would have generated 40,000 rupees at the rate of 8%, still not a very handsome return. For 5 years, one would have invested 60,000 rupees, earned 84,000 rupees, a good return of 13.65%, but still not very, very exciting. 7 years would have contributed 84,000 rupees, generated a good amount of 1.29 lakh rupees, impressive. 10 years, 1,20,000 rupees, almost doubled the amount which he would have invested. So 2,27,000 at the rate of 12.27. Now this is where the magic happens, that you invested 1,80,000 rupees in 15 years and made a whopping 7,57,000, almost close to four times or more than 4 times of the money which you contributed in 15 years. That is forex. And whereas if you would have put it in a bank, probably you would have just generated double the amount in 15 years. So that is the power of SIP in the long term. Now, rules of investing in SIP. There are certain rules of the game. Now, whenever we play a match, whether it's a cricket match, whether it's a football match, there are some rules of playing the game. So, similarly, there are some rules of investing in SIP. So, rule number 1 talks about it's a beginning of a long journey. Start with small steps. So, whatever you feel that you can comfortably take out in a year, start with on a monthly basis. Start with those small steps. Rule 2 talks about never wait for the right time to invest in markets. Start early. Don't think the markets are all-time high or the markets are going to correct and I'll start late. So there is as we spoke in the previous slides, there is something called as time value of money. So do not waste time and do not delay in terms of investment. So just the right time is today. Rule 3 talks about discipline, calls for patience. Just regular investing is not enough. You have to be patient. So keep patience for 1 year, 2 years, 3 years. We have SIP investors since last 4 years, 5 years. They have not made substantial gains, but they stay invested, and at the end of 7 years, 8 years, 10 years, all their previous years losses or previous year marginal gains get recovered, and they generally end up making double-digit returns through the SIP route. So patience is very, very important along with discipline. Rule number 4 talks about investing in good and bad times of market brings reasonable returns. So you have to stay invested during the bad times as well as good times in the market. Rule 5 talks about act like a businessman and understand the power of compounding. I spoke about this power of compounding in the previous slide also, and we've also made a special video on the power of compounding. You can subscribe our channel and have a look at those videos. And we'll be releasing more videos on similar lines. So you can expect further in the future days that we'll be releasing more videos on this. So act like a businessman and understand the power of compounding. A businessman never loses hope mid-year or after starting a business that, okay, fine, there are some bad years, there are some good years, there are some boring years. So think like a businessman. Do you know that like if you invest 5,000 rupees per month for 25 years, your earning potential is 1.3 crores. Whereas if you invest 5,000 rupees per month for 25 years, but you keep on increasing your SIP with increase of your income and expenses per annum at the rate of 10%, you get a corpus of 3 crore rupees, almost double, just by increasing 10% every year with the increase of your income. Also, do you know the future cost? We've already talked in the previous slides, but MBA which cost 20 lakh rupees in 2018 would cost 82 lakh rupees in 2030. Something which costs 10 lakhs rupees today will cost 40 lakh rupees tomorrow. Something which costs 45 lakh rupees in medical today will cost 2 crores tomorrow. So don't panic, but start your SIP today. Like you choose best for your family, so choose best for you. Therefore, go for SIP today. Long term wait will fetch you positive returns. That's the importance of SIP. Now, just to give you some sense as to what is happening in the last 1, 2, 3 years in the mutual fund domain in various categories. So these are the category of mutual funds: equity saving category, balance, large cap, mid cap, small cap, multi-cap, thematic, ELSS, international funds. So we've just tried to give you some NAVs as to where they are heading, where they were in the month of Jan 2018, then in the month of Jan 2020, when the markets dipped in the month of March 2020, and then as we speak, in the month of August 2020, what is the recovery? So equity savings category in the month of January 2018 was 35.3, then it rose to 37.82. It fell down to 31.7 when the crash happened in March 2020. Then, as we speak, in the month of August, it's risen up from 31.7 to 36.87. And similarly, if you just visualize the rest of the funds, the balance category was of 266 NAV. It rose to 281 in January to 2020. Then it fell down to 197, and then again it rose to 266. So almost all the losses which happened from January to March have almost been recovered, leaving a marginal 5 to 10% here and there. So somebody who had invested between these times would have substantially made good money. So these are the category of mutual funds where you see the NAVs going up, then going down, and then coming up. So this is basically called rupee cost averaging. And in the multi-cap space also you saw that NAV of 10, then it rose to 12, then it fell down to 9, and then again it rose to 12. So on and so forth. International funds from 15, it rose to 21, fell down to 17, and then it rose to 28. So that is where the power of SIP, power of investing in various asset classes or various spaces within the mutual fund domain plays an importance as an investor. Thank you so much for the watch. In case you haven't subscribed our channel, please subscribe our channel. Also, we have a flagship strategy by the name of 10x Income Net Worth. We've also made a lot of videos on this. You'll see it on our Facebook, YouTube channels. We promise to deliver more value to you in the times to come. Thank you so much for watching, and please do subscribe our channel for receiving future updates, and hit the bell icon so that a notification can be sent to you whenever we release a new video. Thank you so much.